focus on the lesson. Live in the hills, but it still get a spread. Started with a live, but it still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I hope you're having a wonderful day. Today was absolutely insane, and I have some bad news for you. Powell has officially quit. Yes, but no. It's not as if he resigned, but if you've watched as many Powell meetings as we have, and you got to see today, it was very clear that Powell, he took a very different tone, and it was quite surprising. So we got a lot to talk about. I have a great breakdown for you. We're going to talk about what was bullish today, what was bearish, the inflection points that we had on the day during the whole, meeting. There was two big things that really drove the market, and we got to talk about why that happened, and then we're going to talk about the biggest changes to the FOMC and what we saw this time around, and then I have my conclusion for you, but I'm going to start with the conclusion. So going over all of it, it'll make more sense, but here is the conclusion, ladies and gentlemen. Volatility is here to stay, and it is not going away anytime soon. So people are asking, is it bullish or bearish? I'm still kind of bearish towards all of this. Again, we're going to talk about the bonds and all of that, but what I'm trying to say is volatility, literally up and down, this back and forth, it's not going away anytime soon. Based on what happened today, pretty much every single data point that comes out, economic data, anything related to the economy, it is going to be that much more important, and it is just going to be really volatile because that's what Powell did today. He really did throw the keys to the market and the data, and now Powell is chilling in the third row, bro. He's in the back seat. So we got a lot to talk about. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/TheStackMarket. I'm very hyped. Thank you guys again. Yesterday's video, you guys were very constructive. Like I said, I love the disagreements when they're respectful and just, it's like people really getting to the bottom of it. We had a lot of talks today on stream, and you guys were amazing. So if I could just express my gratitude to this type of conversation, I appreciate it so much. So thank you. But let's talk about it. What happened? Here is the bullish part of today. They did raise by 75 basis points. This was expected, but not expected. Again, I was surprised. I still am holding to my theories here, but it did come out. Some people were happy about it. Some people weren't. But if you notice the reaction, there was quickly a lot of different emotions, more or less. Pretty much right when we got it, that was expected to be bullish, but then people kept talking about what's next. So the bullish part was they raised, they didn't break the trend, and now with Powell going at 0.75, he's not as far behind the curve as he would have been if we went smaller or if we were back a couple months ago. This is the thing that people really liked. Even though a lot of people believe the Fed is behind the curve, the thing about today, they're saying, all right, if Powell's willing to be this aggressive and he already moved it, 75 basis points, what this is saying is that they can actually act quickly to start matching up with what the markets are pricing in. So that was very good. The dollar dropped, and it dropped big. It is still up on the week, but we've been talking about it. That's kind of been like the VIX, and that was very good. The bonds kind of moved. It was more later of the day, but pretty much what we would have expected to move if it was really going to be bullish, you did actually see some movement there. So that was the bullish part. What was the bearish part about today? Like I said, Powell is in the back seat now. The uncertainty has increased, and that's because he said it. So what do I mean about the back seat? We're going to get to it here, but pretty much Powell said a lot of things are outside of his control. He even mentioned the reason why I was freaking out about this meeting. He said in his whole history, his career, he's only seen 1 or 2 times where the Fed had really bad data, was in a blackout period, and was kind of forced to change what they were signaling for the last month or so quickly. And that's really what we saw today. He blamed the uncertainty. I mean, the market accepted it for now. We're going to watch how that keeps going. But essentially, he's in the back seat now. He's saying everything has to do with the data. He put 100 basis points on the table if the data warranted it. He said he could go slower. But now, by letting off of control and saying this, pretty much he's getting himself another hedge for the next meeting, but it's just highlighting the conclusion. The data is going to be key from here. So that was the negative part. Uncertainty increased, and then the odds of a recession actually increased with this. And the reason why, because now, right when people got it, they're like, yeah, that's good. We got Powell moving. But then people are like, wait a minute. The Fed is embarking on the tightest or the largest tightening ever, and it is now raising rates and tightening financial conditions right as economic data is starting to slow down. People are firing. Again, this now brings up the recession talk. So that was the negative part. You got the bullish part as well. But now let's talk about the real big moves today. So here's the daily chart. You can see the release. It was actually small. It was bigger than expected or bigger than what we usually got. But as the press conference started, you probably know this. You probably noticed this giant green candle. And that was on the comment where Powell said, I do not expect moves of this size to be common. So he pretty much said, yeah, we raised, the data warranted it, things changed, we kind of had to, or whatever he wanted to say about it. But then he said moves of this size will not be as common. The market really liked that. Then it came down and then kind of chilled out. But now this kind of big drop going back to VWAP, what happened there? That was on Powell's comment towards the soft landing and even recession and economic activity. Pretty much he said the soft landing is still possible, but outside of his control. And then they were asking him, will you do 75 or 100? He said, those are outside of my control. If the data is there, again, this is the ironic part about today. He went back to data dependent, which is the same logic when they were peddling that transitory, but he pretty much said the same thing. And this is kind of where people started, wait a minute, Powell keeps doubling down on this, where he's just saying it's out of our control. It's out of our control. It's still possible, but there's a lot we can't control. He really did double down on that. So that's when we came down. It chilled out towards the end of the day, had a rally and drop, and ultimately we ended right about where we opened on the day, or where the Fed meeting started, and we didn't really go higher than the highs of prior to the Fed meeting today. So it says a little bit, but again, towards the big option expiration on Friday, I mean, we didn't really move much today besides the gap up, and that's what makes it interesting. And there was an ECB emergency meeting. That was a little bit interesting too, but again, Powell took over everything after that. But to the biggest changes now on the Fed meeting, here is the strike through comparison, and you can see compared to last meeting, the blue is what they added today. If it struck it out in red, that is what was in the last meeting and they took out. But this was one of the big changes people were noticing. They literally removed the line of saying that they are expecting inflation to return to the 2% objective. They took that out completely. And then at the end of the paragraph, what they added was that the committee is strongly committed to returning inflation to its 2% price objective. So if you don't notice why this is such a big change, because literally a month ago, they were saying that, yeah, we believe that, you know, inflation is going to come back to normal. And today they just said, no, we're not saying that. And we're committed to making sure it comes back. So it's like, that's a different tone in and of itself. And then you had a dissenter on the move, and it was Esther George, who is traditionally a little bit more hawkish, and she came in and she was the only person who disagreed and said that they should have went for 50 basis points instead. So that was interesting to watch, but those were the biggest changes. Like I said, there's good, there's bad, but ultimately the way Powell, that's why I'm saying he kind of quit. He kind of just said, hey, it's up to the data. Data just opened him up the door to be more hawkish than ever, continue on this Volcker moment, or even really not do anything and then not be as easily pushed into a corner from here on out. So what I'm saying, my conclusion is there's going to be a lot more volatility with every single data set, as now it has more meaning. So pretty much Powell kind of got himself out of this, and it was good. They got to catch up on the rate hikes a little bit, you know, make some people happy, have some people a little bit confused, but it came at a cost of uncertainty. And now we are going to watch this battle between, are we worried about inflation or are we worried about recession and economic decline? Because those are really the two things now. It's either if Powell's done, it's recession. If not, we're going to deal with more inflation. So hopefully this helps. I do have a couple of plays for you. So let us get into the plays. But as far as the plays, I got to start with this one, man. TLT, baby. Either tomorrow or Friday, there might be an opportunity. The contracts got a little bit cheaper today, but honestly, nothing too crazy. That's what sucks about these movements, because the first run-up kind of bakes in some of that premium, and you got to remember, a lot of these contracts have less time than what they had a month ago, but most of them are at the same prices. But I still like it. It depends on the premium, depends on how they move, but pretty much I think we might get a 2 or 3 day digestion leading into next week, and this may create a little mini open door to play. And pretty much what I'm telling you, my views on bonds and them continuing to go up, I feel the exact same way as yesterday. Again, I was kind of skeptical towards the 3/4 hike, and even though it happened, like we said, the move really wasn't too crazy. A lot of intraday, but you can see we didn't change too much open to close. But I still think the bonds are very interesting, and we got to watch where it plays from here and then by the end of Friday. So watch out for TLT. That is the first one. The second play, XLU. This is the utility ETF, and take a look at the daily chart. Absolutely demolished, but if things turn around, I think this one could be a good one. Pretty much uncertainty in the economy, recession, and even last time we embarked on a hiking cycle, utilities actually did good. They have been getting clapped seasonally. You could go through the chart. You'll notice around June and August, they get clapped a little bit here and there, but you also have LNG kind of factoring into that recently. So I think it's interesting if we do get a big turnaround, or if anything might emerge. I don't want to call it a safe haven just yet. This one could be decent. I'm definitely going to be watching that tomorrow and as we get into next week after the expiration. But there was that. And then finally, baby, shout out to Chad, MO. Chad brought this up today. I love it. I love it. I love it. People were talking about, hey, what do you think about MO? It's declined a lot recently, and we had a good answer to it. It's simply this. If you see a rotation back into consumer staples or defensives, remember, last month or so, they have not really performed good at all, if you really think about it. But if we kind of get a little volatility back and forth and you see more people kind of piling in to those consumer staples, I think MO and a couple of others, even like Coca-Cola and whatnot, they could actually do very good. So I will be watching those coming into next week as well too. But those are the main plays. As far as everything else, I only made 2 other plays today. I sold out of one more of the Beto. Remember, we bought this last Friday, 20 cents. Sold out the other one for $1. I have 2 more left for free. I sold out 2 yesterday for 70 cents to get them free. This was another one of the free ones. So rode that one out there. That one was a good one. And then I opened a MSF/MSF. It is a future on the Swiss franc, and it is shorting it. It's kind of small after the Fed meeting. I did it before. I'm down like 200 bucks on it. Even the yen turned around a little bit today too, but I like this play. I have a bigger theory with it, but I don't think it's quite there, so I'm not really ready to share it. What I can tell you is that it is related to the yen stuff. So I grabbed a smaller one. Again, I didn't go mini on the JPY, so this one was a mini one. Thought we'd chill with it for a little bit and see, but definitely have my eye on all of the safe haven currencies globally. But that was pretty much it. Tomorrow's going to be exciting. We'll see what kind of cushion it gives. And again, there's a lot of money on that Friday expiration. So just get ready for the moves, even if we kind of top out, depending on where the gamma is all tied up. But I think it's going to be a big one. Friday's going to be the real main event. And if we get any signals in the meantime on bonds, the dollar, the yen, anything like that, it may very well kind of lead or snitch on if we're going to get digestion, a false bull, or if really we might be able to string together some of that summer rally. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, you only get this story pieces at a time, whether it's real life, your destiny, so don't fight it. It's beautiful, but all you need is a little piece. So take the little pieces and let that build the path you need to go. I'm just getting into the philo already, baby. So don't get me started. Today was still hype, baby. I love you, Chad. Drink that water again. Thank you for the awesome comments and awesome discussions we had today. I love it, and I hope you guys are ready, man. The volatile year, we've been saying it. I mean, it ain't going anywhere, so get locked and loaded. But that is your watch list. Wait, did I already do this? I think I already did this one. Did I do that one? I don't know. Now I'm confused. Honestly, you blame Powell. This guy, he came out, man. He ain't even driving anymore. Okay, I'm sorry. You know, we can talk. Maybe we're going to save this for Twitch on Friday. Okay, I love you. Goodbye.